Hi, I'm Dr. Ken Henry. I'm a practicing attorney in Louisville, Kentucky. I'm also a content creator, online entrepreneur. In this video, we're going to talk about business forms, what type of business structure you're going to have. It's important that you figure that out early on in your entrepreneurial journey. Never too late to redo or refine your business structure, but it's something that you need to think about very carefully. Now, in this video, I am not going to give you any legal advice. That's for your lawyer. I'm not going to give you any accounting or tax advice. That's for your accountant. I'm not going to give you any financial advice. That's for your financial advisor. What I am going to do is hopefully give you information that you can use to develop your business structure and enough basic information that you can go out and gather more if you need it. So let's talk about business formation and business structure. One of the first decisions, perhaps the first decision you'll have to make in your entrepreneurial journey is what type of business organization are you going to have? You know, the minute you create a product, a course, a book, whatever it might be, and begin to sell that product, book, or course, you're in business. And the form of your business will make a world of difference in a number of areas. Many people start out as a sole proprietorship. And there are some advantages to being a sole proprietor. One, you own it, it's yours, but you're the only owner. You have a very straight route to being in business and making your first sale. Sole proprietorship, you can even use your own checking account. It's easy to set up. You're the manager. Very few regulations. May have to buy a local business license. Check your local rules and regulations on that. But as a sole proprietor, you can be in business pronto. There's some drawbacks. Even though you're taxed at your individual tax rate, you will have to pay self-employment tax on your income from your business. Your business exposes you to complete liability for any debts the business might incur, loans, for example, and for any liability for any damages or injuries that may be caused or claimed to have been caused by the business. The simplicity of setup then becomes sort of less important when you think about how a sole proprietorship can lead to real problems. That takes us to the second business form, the LLC, or limited liability company. The LLC is sort of a partnership with the protections of a corporation. If you're a single member LLC, then you're basically a sole proprietor with corporate protections. But it's more difficult to set up and manage. You're going to have to fill out and file with your Department of State in your local state or wherever you want to set up the LLC forms to create your LLC. You're going to have to do an annual report. You're going to have to pay LLC corporate taxes at some rate. And the income then, however, is flowing through member distributions. There's some tax advantages to the LLC format as well. Let me give you an example. If you can take a reasonable salary from an LLC, a reasonable salary, and that money is taxed at your individual tax rate. Distributions that come from the LLC are taxed at the individual tax rate, plus you have to pay self-employment tax on that. Now, I'm not giving tax advice. It's not my bailiwick. But there are some advantages to the LLC. In addition, unless you personally guarantee a loan and the business has a loan that it can't pay, you would not be responsible for repayment of that loan. That's an important concept. Liability, if again, like a product or a course, or somebody claims that somehow the business injured them, then you would not be personally liable for that claim through an LLC. The third type of business structure is the S corporation, meaning small corporation, subchapter S. Again, it's more complex to set up. You have to do the corporate paperwork to set it up and register your business. There are more record-keeping requirements with an S corporation than with an LLC or a sole proprietorship, certainly. And there are annual reports that have to be filed. But you can have multiple shareholders. Now, with the LLC, you can have as many members as you want. And the LLC can have another LLC or a corporation that owns it. You can also have foreign entities or individuals as members of the LLC. But with the S corporation, you only may have 100 shareholders who must all be United States citizens, individuals. So that's a limitation. One of the advantages of the S corporation is the flow-through taxation. You can take a salary from the S corporation and then distribute dividends, either quarterly or semi-annually or annually, however you want to do it. It's a little easier to generate capital, to borrow money with an S corporation, but oftentimes, again, banks will ask that you personally guarantee the loan. Liability can't be extended to the shareholders, but rather is the company's liability itself, with the exception of loans that are personally guaranteed. But if the corporation is sued, that liability would not extend to the shareholders. Many family businesses organize as an S corporation. And then there's the C corporation. If you're ever going to think about going public, you would want to form a C corporation. C corporation is much more complex to create. The paperwork is quite a bit more. The record keeping is even more stringent than opposed to the S corp or the LLC or the sole proprietorship. C corporation may have unlimited shareholders, can have foreign entities and individuals as shareholders. And C corporations, unlike LLCs and sometimes S corporations, are recognized worldwide. So there's some advantages there. Here's the big disadvantage of a C corporation: double taxation. The profits generated by a C corporation pay corporate income tax, are subject to corporate income tax. The individuals who draw dividends from the C corporation then must pay tax on that money as well. So in essence, the profits of a C corporation are taxed twice. So thinking about your business, many of you are probably going to be soloing it, so to speak. So your choice should probably fall among the sole proprietorship, the LLC, or the S corporation. My law practice is a professional limited liability company, and it affords me the protections that we have discussed about the LLC as well. LLCs are relatively easy to set up. There's some paperwork that has to be done, but compared to the corporate structuring, much simpler. There's not as much record keeping. You don't have to have the minute books and have board of directors and minutes and so forth. One other advantage of an LLC is you can actually hire somebody to manage your LLC, to manage your business, or you can manage your own business. And if you've got multiple members, you can manage one of the members, or the members can all participate in management. Flexibility of an LLC. If you're going to have partners, then the LLC is a good form because you may want to have varying ownership interests. For example, you might want to base it on capital contributions of members. So if one member provides half of the capital to start the business, and two other members provide a fourth of the capital each, then most likely that one member would have 50% ownership interest and receive 50% of the distributions, and the other two members would have 25% each of the capital or of the membership interest. Now, and it also comes down to making decisions as well. It could, how the company is managed is built into an operating agreement, and so the voting power could be allocated based on ownership interest as opposed to equal voting power. There are a number of ways that the LLC is very flexible, and it's one of my recommended for small entrepreneurs business forms, but you need to decide which is best for you. If limited liability is important to you, then you do not want to be a sole proprietor. If getting up and running fast is the biggest thing for you, then maybe you start as a sole proprietor and then become an LLC or form an S corporation. You have the flexibility, but these are decisions you have to make based on what your business needs are at the time. I hope you found value in this video. If you did, please subscribe, give us a like, and hit the bell so you'll get notifications when we drop new videos. Next in our series of videos, we're going to talk about contracts, and we'll be doing a series of videos on contracts. If you're in business, you're going to be dealing with contracts on a regular basis. So be on the lookout for that video to drop, and we thank you. And again, please hit the bell, subscribe, and give us a like.